This interview is brought to you by Transformational Mortgage Solutions. You can check out the full episode at LykkenOnLending.com.
Folks, I'm excited to have with me today on the podcast two industry veterans, one that we've had on a number of times. His name is Jack Nunnery of Texas Capital Bank, and another good friend that I don't believe we've had on the podcast, that's Brenda Clem. Welcome to both of you.
Thank you.
Well, thank you, David.
Good to have you both here. Let's start off with you, Brenda, and talk a little bit about, I always start out with this question, did you get in the mortgage industry accidentally or intentionally? Tell us about your journey.
By accident.
Okay, so how has that happened?
1982, I'm working for a bank, and the gal in the processing department quit. So that's how Brenda got to be a processor and got started in the mortgage industry 37 years ago.
37 years ago, and today you're Executive Vice President of Capital Markets for Pavaso, which is an Old Republic company. Talk a little bit about your current responsibilities, if you would.
So I have been an advocate and evangelist for eNotes and eMortgages, looking at my background, secondary capital markets, warehouse lending. About 15 years ago, got involved in bringing this to the industry and bringing more of an education and awareness of what technology would mean for the industry. So had a natural fit with Pavaso a little over a year ago in extending their digital solution into the market.
You have got to be one patient person. It's a long time. eNotes has been a long time in coming, Brenda Clem. I admire your tenacity and patience. It's amazing. Been a while.
Yes. That first eNote was done in 2000, so yes, I've been at this a long time.
Been at it for a long time. Jack Nunnery, it's so good to have you back on with me, and I can't wait for you to join me on a more regular basis at some point in time down the road when you're closer to retirement, but it's good to have you with us. And Jack, why don't you share with our listeners you and your background, and did you get in this intentionally or accidentally?
Well, David, in 1982, similar date to Brenda, I was working for International Harvester Company, and I was a district sales manager in their heavy-duty tractor trailer. So I was selling dump trucks and over-the-road, large transport trucks. And a friend of mine that I'd gone to college with wanted me to interview with a company that's no longer around called Stockton Watley Davin and Company in Jacksonville, Florida.
I remember them, though.
So I got into the mortgage business in 1983, and we can all remember that's when interest rates were 15, 16, 17%, and that spawned then the creation of the negative amortization product, right? Because, we had to get rates down to qualify borrowers, and because not many borrowers would qualify at a 16% interest rate.
No.
So I've been in the business for 36 years, David.
Well, and you also had a little bit of a journey through the technology world. You have a strong technology background. Talk about that, and then bring us current to your current roles and responsibilities there at Texas Capital Bank.
Sure. Yeah, I worked on a lot of major tech projects when I was at another top lender, and during that experience, I was recruited by a technology provider. They created loan origination systems, and I stayed there for a while. And as I always tell everybody, we are the sum of all of our experiences. And the experience that I got working in the mortgage tech space has proved to be invaluable for me as I matriculated through the rest of my career. So today, I'm president of mortgage finance at Texas Capital Bank. We are a significant lender in the warehouse space. We also are a correspondent lending aggregator, and we also do specialty lending, which is MSR financing, HECM tails, assignable buyout, other products related in that area. So I'm responsible for all of that, and, it keeps me very busy, David.
That is, yes, you've done an outstanding job, and you're one of the leaders, both not only just in volume, and you guys are a price leader. You're just out there. I think you're funding in warehouse lending. Jack, you're one of the leading financial institutions providing warehouse lending. So it'd be great for you to start by giving us, for those that are new to the industry, that have a lot of those listening to the podcast, what is warehouse lending? And then, Brenda, I'll have you fill in some more information after that. Jack?
Sure, David. So for whatever reason, the mortgage industry and the real estate market have decided that it's better if we all close at the end of the month. on our residential home loans. And what that does is create, a tremendous need for month-end liquidity. And, your typical independent mortgage banker does not have sufficient liquidity to close $200, $300, $400, $500 million worth of residential loans, all stacked in the last week of the month. And so what a warehouse lender does is provides liquidity to mortgage bankers to close volume. It creates, a debit on the warehouse line. Interim interest is charged for the use of those funds. Inevitably, the loan is either purchased or securitized, purchased by an investor, could be a GSE, could be a correspondent aggregator, or the mortgage banker securitizes, and then, there's a repayment back to that warehouse facility, which then becomes the credit to offset the initial debit, and then we just continue to recycle that liquidity, all through the month, with obviously a eye to, that final week of the month where it seems like 45 to 50% of our volume stacks in that time frame.
And Brenda, you have been a leader in the space of warehouse lending. You consult to Stanley, our good friend Stanley, who has SRG, which is one of the backbones of technologies that run many warehouse lenders out there. So you certainly have a tremendous amount of knowledge about warehouse lending. Give your perspective on it. This is a little bit of educational time for those that are new to the industry.
Absolutely. Thank you. So having actually run a warehouse division back about 20 years ago, and that's how I came to know Stanley and utilized his software, Street Resource Group, is WLS. He's got about 70% market share. And what that software provides, as Jack mentioned, to the independent mortgage bankers, is it's the accounting software that actually manages the whole movement of money between the bank who extends the warehouse credit to that originator. The funds get wired to the settlement agent, enabling that loan to close and fund. That original collateral is then returned from the settlement agent in a paper environment back to the warehouse lender, and we call that period of time wet, and that's when the warehouse lender is most at risk. The warehouse lender will hold that collateral until such time as they're notified by the originator to say, we need you to go ahead and ship that original note onto the end investor. In the paper world, we put that in FedEx and we send it, and we hope that it arrives at its final destination. In the e-world, which we're going to talk about a little bit, it's the transfer of control and location through your e-vault connecting to the MERSI registry. So once that original collateral is delivered to that end investor, the originator has the obligation to forward them the entire purchase package, which is credit and underwriting file, and the investor makes the decision, we're going to buy the loan, we think it's a great asset. They will wire those net proceeds back to the warehouse lender. The warehouse lender settles the loan and repays that debt obligation off the warehouse line, and additional proceeds are deposited into the account for the loan originator. So, right now that's somewhere between 17 and 20 days. If you're selling into the GSEs, it's 4 or 5. So we're kind of all over the board, but we're with the introduction of eNotes, we look at that being a different model.
Yeah, and I'm looking forward to getting into that. So listeners, very simply, if you're a bank, you use depositor funds to fund your mortgage loans. If you're an independent mortgage banker, you use a warehouse line of credit. That's probably the highest level of simplicity we can give you there. But what's changing is how the notes are delivered. You got into that really interesting, Brenda. So let's get a little bit of an update. What is an eNote, Brenda? You define it. And then, Jack, you're a leader and one of the first to get into accepting eNotes in warehouse lending. And so as a leader, I'm hoping your comments will inspire some of the other holdouts in the warehouse community from getting more involved. So, Brenda, what is an eNote? Talk about how it functions. And then, Jack, talk about why you started believing in it.
So, as I mentioned earlier, first eNote was done back in 2000, and the industry looked at it and said, oh, that's nice. And then they just kind of went back to their environment. So we had 2 regulations that were drafted in 1999 and 2000. Those are UETA, the Uniform Electronic Transaction Act, and e-Sign, which is the electronic signatures in global and national commerce. And what that does is provide for laws that whether your signature is in writing, wet ink, sign, or digital, the use of the electronic record satisfies a requirement that all of the parties have agreed to that transaction. And so what those electronic signatures, such as when you go to Target or any of your grocery stores and you're signing on that signature pad, that provides a full audit trail of your receipt, your review, and your acceptance of the transaction. And what we did as an industry through MISMO is we created the MISMO Smart Dog. What a Smart Dog is it is secure, it's retrievable, it creates a transparent audit record. You can't alter the document because you actually execute the document in a secure signing environment. But what that has done for us as an industry is we have no more lost notes. We have no more documents that are getting altered at the signing table or replaced by some other document. And so it's enabled additional liquidity and security within the mortgage market. Fannie and Freddie began purchasing eNotes back in 2005 with a few originators. Through the last couple of years, we've seen a lot of dramatic growth within the acceptance eNote activity. We have a lot of significant technology advancements that have come to the market. So not only are we seeing the borrower able to execute the initial application and the disclosures at time of that initial application, but also we're seeing that extension of technology through the entire transaction and now enabling all of the closing documents or in a hybrid close, as many documents as your end investor will support. And so really we get back to why is this important, and having the ability to electronically create a secure transaction with an immutable data record, a full audit trail, is really important in bringing that liquidity and security in the mortgage market. We have a due diligence process that happens today between the originator and the end investor. It's pretty costly, somewhere between $600 and $800 per file. And if we have this full digital record that can be audited electronically, we now have an asset that theoretically will price better in the market.
Jack, when this first came out, warehouse lenders were going, I like paper. We love that. We could track it. We could hold it. We have good collateral. What is it that caused you to look at this? Was it the fact that the GSEs got in, or did you see some efficiencies? Explain your reasoning to dive in. And you were one of the first to do so, and I applaud you for that.
Well, really, David, the impetus or motivation for us to get in is that we wanted to stay, on the forefront of technological advances in the mortgage space. I personally believe that the mortgage industry is teetering on an inflection point, and the business that we do today is going to be radically different in 5 to 7 years from now. And you can either be an early adopter or you could be a lagging adopter. And I think if you're a lagging adopter, whether or not it's in the area of origination or warehousing or even as an investor, it's going to cost you volume, and that's going to translate into profit. And so we wanted to be an early adopter of this. And so, yes, we are banking eNotes today on our warehouse facilities. Moreover, we're also purchasing eNotes as a correspondent lending aggregator. So I always tell everybody, it's exciting. We will bank your note, we will buy your note, and we have settled to both GSEs with eNotes. So, we're really excited to see, this is fun, when you're an early adopter and you're implementing, game-changing technology. The warehouse space, Brenda alluded to it, that, has been slow to embrace the eNotes. And, that's kind of evolved over the past several years. First of all, it was, can we foreclose against an eNote? And so when that question got answered, yes, you can, then, came the inevitable question of, what is this going to do to the income streams of warehouse lenders? Because warehouse lenders typically make their money off of interest income. Yeah, they'll charge some fees, but the bulk of the revenue that is created in a warehouse lending environment is created off of interim interest. And, if you have an average dwell time on paper notes of 15 to 18, 19 days, and, Brenda said earlier that with the GSEs, 4, 5, 6 days, to run the gauntlet from, closing, getting the eNote back into your environment, running quality control on, the closing to make sure that, the closing happened in the manner consistent with what you wanted to happen on that closing, was the final pay-through date right, is the property address process right? Is the loan amount right? So there's a quality control effort that takes place on the loan before you would either transmit it to your correspondent lending aggregator or to your GSE partner. And that's going to take time, a day or two, depending on, how large the queue is that your people that do that function are going to be able to turn it around. So, you look at somebody who's selling to the GSEs, and you could, see somewhere between a 3 and 5 day dwell time on those loans. And, if you're a warehouse lender and your average dwell time is 18 days and it's going to go to 3 days, well, then you're going to shed 5/6 of your interest revenue. And, that's always a conundrum for a warehouse lender. And, I'm not saying that's the reason that many warehouse lenders are not adopting, because I don't want to get inside of other people's brains, but that certainly would be a demotivator. We, decided we were going to just go through that, and let's get out there in the space early. Let's figure it out. Let's understand the dynamics, what we're going to have to do to fulfill in this space, and, how is that going to impact income streams at our institution. And I would rather be early than be late trying to figure all this out, David.
Well, I think it's created, I would assume this has created a advantage for you. You can still do it the old way. You probably still have some fundings done that way, but you can do it the new way. And seeing as this is the future, and it is now, we're at a tipping point where it's rapidly being adopted, maybe not by the warehouse lenders, by Texas Capital for certain, but other warehouse lenders need to. This does put you at a distinct advantage, I would assume, if someone's considering, going with one warehouse lender versus another.
Absolutely, David. And let's jump forward 5 years in the time continuum, right? We've got blockchain. We've got validated, verified data flowing through the blockchain environment. We've got bots, that are performing a lot of the tasks. This whole landscape is, sitting on the precipice of major change. And so as I look at this, it's just so exciting to me, to be able to participate as we reinvent how we do what we do in the mortgage throughput environment.
And this last podcast we had on the podcast, we did a Mother's Day special, and we had Marcia Davies and her daughter Emily Davies. And Emily was known for asking, well, why are we doing this? Why are we doing this? And I think those are the questions that you've responded to, and I applaud you, Jack, for that. Brenda, I want to get into talking about the funding of eNotes. Give us a little more insights into it, specifically when you're talking about how to access the eVault and some of the other aspects that might have created some wondering if they want to get involved in. What's kept people out in your mind?
I think one of the things that kept them out was we really only had 2 investors on the back end who were aggressively wanting to buy eNotes, and that was Fannie and Freddie. And so there's about 1,600 approved seller servicers. So as Jack mentioned, warehouse lending is really a benefit for the independent mortgage banker. Many of them are not sellers to Fannie and Freddie, nor are they going to be because of the size of their organization and their business model. So they sell into other aggregators. So as an industry, and there's been a contingency of folks like me who have been out speaking to what are the benefits for this, to help educate the industry, to help them make a decision and take some of the scary away from it. The other issue that we have is, we have a lot of Ginnie Mae product, FHA and VA. It's about 35% of all the origination out there. And so if that's your core business model, today they're not purchasing eNotes. There's an initiative going on for 2020. We don't think it's going to make the finish line even for 2020, possibly 2021. So we get back into this readiness and kind of what's eligible in your production that can go eat. So as Jack has been talking about, the pricing model is a little different. If we're going to warehouse fund eNotes, the dwell time's a little shorter. So we need to make sure that we're not leaving any money on the table there. But also, the warehouse lender now has to get approved with the MERSI registry. That's how we track what eVault, the authoritative copy of the Smart Doc, resides in. The warehouse lender and anyone who would come into the control position or holder of that collateral, the eNote, has to have an eVault. So that's an additional piece of technology that you need to make sure that you're partnering with the right service provider there. As Jack mentioned, earlier in the conversation, how they made that business decision that this is a market differentiator for us and we want to be a leader in this space. And by no means is anybody late to the table. We only have 43 originators. We have 18 of the 85 warehouse lenders who are participating. We've got 18 servicers. We've got 14 investors, so Fannie and Freddie, plus 12. So we have a lot of opportunity out there to still bring folks into enabling some type of digital transaction in your environment. Most of the issue has been with eNote liquidity, making sure that end investor would be able to purchase. So, for example, you have an originator, I locked a loan with Chase. At the time the loan is locked, they don't know whether it's going to be a paper note or an eNote. And so what happens is we get to the closing table, the borrower consents, yes, I want to do an eNote closing. And, in this example, Chase says, you can't sell me an eNote, I'm not ready for it. So I have to peel that loan back. I'm paying pair-off fees to pull it out of that commitment, and I have to commit that to Fannie and Freddie, and there might be a pricing difference in that asset. Or if I committed it to Chase and Chase has it in a forward to somebody else, all of a sudden we have to unwind those transactions or do a cancel in place. So those are considerations we as an industry are still working through.
Jack, how are some of your customers working through that, and how many of your customers are really embracing the eNotes? Talk about that.
Well, we've got approximately 20 customers today in the eNote production environment in a meaningful way. And so Brenda hit on something, David, that is critical, and that is the adoption by Ginnie Mae of the eNote. And, they came out with the 2020 white paper, and part of that white paper basically are the 2020 roadmap, and that really spoke to a number of things, but one of the central points in that document was the work effort or the project to become e-ready over at Ginnie Mae. And interestingly enough, in that document, they segregated the securitization of e versus paper. And so they said, well, you've got to have eNotes, all eNotes in a security and all paper notes in another security. We're, not going to allow the two blend together. My guess is that there's probably, some performance characteristics that they wanted to preserve the integrity of the dot type in the security. But until we have the ability to do E for FHA and VA, now it becomes a challenge for the mortgage originator, David, because they're going to have to run, a bifurcated process. And nobody likes to run bifurcated processes. All that does is, lower efficiency, and we already have costs that are too high, to throughput a loan in our industry. So, really that linchpin that needs to, be put in place to make this more adoptable across our mortgage community is the successful implementation of this technology project or at Ginnie Mae. And so whether or not that's 2020, 2021, or 2022, it's coming. But as I know from my own personal experience, no technology project goes in without some amount of pain. So I wish them well, but that is a key component to drive more significant adoption throughout our industry of eNotes.
Well, Brenda, I want to get over to you to talk about readiness assessment. You work with clients at Pavaso. You and your group work with companies to get ready and really examine this whole thing. Talk a little bit about what someone should do, first starting with the assessment, the readiness assessment, and then getting through to the point of implementing a program.
Thank you, David. One of the things is sitting down and having that conversation. Who's your LOS provider? What doc provider? Are you servicing or, selling whole loans? What products and programs do you support? Do you have somebody who's heavy on the government side or heavy in that first-time home buyer or housing finance agency or those types of programs, Federal Home Loan Bank? Those guys aren't ready yet. We are having conversations with them, providing them information. So we're hoping to see them come into the market maybe later this year, early next year, but they're still not ready. So we look at, what's available, and it's your Fannie Freddie production. Thankfully, Texas Capital has stepped into the market, and they're buying eNotes. So if that's one of their end investors,
they're funding them and buying them. Yes,
absolutely. And if not, we're going to put them in touch with Jack and say, here, this is someone that you need to get approved to sell to. So we're kind of taking, not a problem, happy to do that. So we want to look at, kind of their internal processes. And again, I'm not getting into a business process improvement. We have people like David who specialize in that. because there is a change internally. That's correct. That's going to happen here. But do we have a champion at that executive level who has allocated funds for this, and this is on their 2019 strategic roadmap? That makes all the difference in the world. If not, we have plenty of resource materials and white papers and other documents to help educate you. That's one of the things that I do, is to spend a lot of time just having a conversation. What does this mean? How do we get started? Going through the vetting process of choosing the right technology provider, helping with getting you approved through the MERS registry. Most people are already approved on the MERS system. Those are two different things. But also looking at, the long-term strategic plan is not only the execution of the eNote, but being able to execute all of the closing documents, being able to include electronic notarization, electronic recording in the counties that it's permitted, and all of the components that create this full digital asset. And again, those are done in kind of phases, so we're not going from, paper to full E, in a 9-month period of time. And then, just helping out with, getting agency approved. That's something that I can help you with if you want to get approved with Fannie or Freddie, or I can put you in touch with someone else. But again, being able to support all of the stakeholders and bringing them all into the conversation. Who's your warehouse lender? If you have a doc custodian, your servicer. So there's a lot of stakeholders that have to be engaged in that conversation, as Jack in Texas Capital just went through. You needed to bring everybody in and make sure we're level set with everyone, what has to happen here. But it's a great opportunity, and, I think if it's not on your roadmap, we'd like to get it on your roadmap and at least start educating you.
It should be, and I think there's also a lot of reason for getting approved of the GSEs. Fannie and Freddie specifically. Jenny will come around. We're not sure what year that'll be, but they will come around, and this will be the standard. And I'm going to put a shameless plug in for our company. We do the Fannie, Freddie, and Ginnie Mae approvals. We have 100% approval rating. We've never had anyone turned down that we've taken. We haven't submitted everybody, but because they're not ready or issues, and we're not going to submit you until you're ready. So if you're looking for someone, we'll be happy to help you with that. But Jack, I want to wrap this up by talking about some of the efficiencies. And I just applaud you, Jack, as the leader at Texas Capital Bank, and in many ways a leader in our industry in a broad sense, because, you can always tell others, when you're a leader, others are following you, and more lenders are coming in and following you. 18 more warehouse lenders are now doing this as a result of your leadership you brought. What are some of the efficiencies and reasons, while there may be some expense on the front side to get this done, the reasons you would encourage lenders to start getting into eNote production?
Well, just bigger than eNote, David, the digital mortgage or the virtual mortgage.
Yes.
And, eNote is a component of that overall solution. And then, when you put a wrapper around it like blockchain and you're dealing with verified data of high integrity, now, efficiencies can drive, right? Because I don't have to be checking data for data integrity. And I can use a lot more business rules, technology business rules in my fulfillment. And so, that's what really brings this to the forefront, as I talk about inflection point. And so instead of, ingesting data to be able to, in a blockchain environment, work in the environment where the data exists. Now you're not transmitting or migrating and ingesting data. You're in the blockchain environment. You're working with the verified data. You're not trying to move it, because when we move data, there's always a chance for corruption. And so it will be the massive application of business rules and bot into our process, because we have a virtual loan that we're working in, and the eNote obviously is a critical component of this virtual loan environment. But when we get there, we're looking at massive savings on the cost of throughput. So that's why I felt it was so important that, we be right at the forefront of this inflection point.
Massive savings. I love that word. We know what the impact that could have on many lenders. When you look at cost of loans, the originate now is just ridiculously high, up over $8,600 per loan. So we have got to do everything we can, listeners, to begin to impact this. Now, a lot of you are listeners that say, do not have a warehouse line, but you can have an impact. You want to be competitive. You need to make sure that your company encourage them to line up with lenders such as Texas Capital Bank, who is in this to win it, in it to win it, as that saying goes, and they're doing that by being on the cutting edge. For you warehouse lenders that are listening to this that are not yet doing it or considering it, I really encourage you to do so. Jack has provided the leadership, and he's so agreeable to come on, especially with such short notice on this podcast, to come on and talk about this. But we also have valuable resources such as Brenda and Pavaso, what they're willing to do to help you through this. So pay attention to this, folks. It's coming. And I'm telling you, don't be on the lagging part of this formula because you're going to play catch-up. And it's starting to move faster and faster. So, Jack and Brenda, thank you so much for your willingness to come on the podcast to talk about this. Brenda, we'll let you wrap up with some comments, and we'll go to Jack.
Thank you for the opportunity to get out in front of your audience and share some information with them and hopefully encourage you to look at a technology and a digital component within your environment. And the other thing is, as Jack mentioned, wrapping blockchain around this. As an industry, 7 to 10 years from now, which is where I'm living, we will trade mortgages like we trade assets on the New York Stock Exchange. It'll be a full digital asset, and we'll have buyers and sellers who come into the market, and this will be a node that we exchange with a full tamper-evident and secure wrapper around it. So that's where I'm looking at, and there are others as well, but that's what's exciting for me is what that future state will be, and this is just the stepping stone to get us there. So thank you, David, for the opportunity to speak with your audience today.
Well, I appreciate you coming on and talking about it. How can people get a hold of you, Brenda, if they want to learn more and work with you?
You can reach me. Cell phone is area code 513-309-1306, or email Clem, CLEM, at Pavaso, Pavaso.com.
Yeah, but if there's any wondering as to what the potential of this is, take a look at who bought MERS. It was the Intercontinental Exchange, ICE. They bought that knowing that the markets are moving towards, they bought MERS, and which is the center and front stage on this, and they bought that. So, folks, I'm telling you, this is happening. Mortgages will be traded in the market similar like the stock exchange. Jack, let you wrap it up.
Thank you, David. And like Brenda, let me thank you for, the opportunity to talk about a very exciting subject. I'll just conclude the adoption of eNotes, is not, a simple or straight line process. There are a lot of good consultants like yourself, David, in the marketplace that can help originators, go down the checklist of things that they've got to make sure that they have in place if they're going to seamlessly deploy eNote in their environment. There are some sharp edges, and I'm a big believer in that if we can minimize painful lessons learned, the better off we're going to be implementing any new technology. So if you're listening to the call and you're thinking about, jumping into the eNote space, to the virtual loan space, partner with somebody in the marketplace that has the core knowledge to get you there cost effectively and with minimal pain.
That's so true. Minimal pain. And I think one thing I want to stress, there are some sharp edges in there, so you need to learn how to do this right so you don't get yourself cut and bleed a little bit more than necessary. We'd be happy to talk to you about it.
We thought we had tagged all the bases, and we had a fairly significant project team working on this, and yet we continued to find areas where, we thought, okay, we need
Hadn't
to
thought about that
in the process. Well, like over in the area of subservicing, David. I mean,
that's a great one. Yeah.
Who's going to be updating the e-registry for changes, in loan status, and just little things that you might not think about as you focus on the big things like an e-vault and the piping to all of the related counterparties. There are a lot of little things out there that if you can find a good consultant to sit down with you and help you through those, you'll be much better off for it.
Good point. Excellent points, Jack and Brenda. Thank you so much for both of you taking time out of your busy days to be here with us. I truly appreciate it. Great interview. Thank you to all of our guests today. A special thank you goes out to our sponsors, Black Knight, Open Mortgage, Finastra, MBA, Lenders One, The Mortgage Collaborative, Velma, Knowledge Coop, Vidyard, and our newest sponsor, United Bank. Thank you so much, everyone. Have a great week.
You've been listening to Lykken on Lending, a weekly mortgage market update with your host, David Lykken of Transformational Mortgage Solutions. Join us next week, and thanks for listening.